Treasury Secretary Janet Yellen warned of higher interest rates. And you can see some posts here on May 4th. Tech stocks dive as Yellen warns of higher interest rates. But actually, today Treasury Secretary Janet Yellen late Tuesday walked back early comments when she said interest rates may have to rise somewhat. And I think it is a verbal intervention or something like this. And if you would like to understand these macroeconomic things a little bit better, continue watching this video. And in this video I will explain why stock market can't rise super fast when Fed raise the interest rate. First of all, they're doing it to control the inflation rate, and
take a look at this!
You can see that March 2021 inflation rate 2.6%, and it is a little bit high. And you can see this beautiful chart, and inflation was not really high for a long term. Now we have interest rate 0.08. When you raise the interest rate from 0 to 2%, the economy slows down because some companies can't operate with very low margin, and it is not profitable to take loans with 5 to 6% interest rate from banks. Money velocity falling and inflation goes down. And I prepare this peak for you. Here how it looks on a very simple image. The whole world give money to United States as a bonds, or you can just call it a loan, and then United States government give money to the United States banks. And if you will raise the interest rate for USA banks, automatically these numbers will go up too. At the same time we have bonds, and the biggest one United States Treasuries. When you borrow money to the United States, you will have some premium to interest rate, and here you can see that interest rate for bonds a little bit higher than interest rates for banks. And now I think it is perfect time to come to examples, and you have to understand that stock market, it is a risk investment, and imagine that you have $100 million in your bank account, and you need something like 2% per year just for your simple operations. And you don't actually want to spend them or make 10% with some risks. And we have lots of big companies and institutionals who actually thinking the same. And when you're buying S&P 500, you will receive 1.4% in dividends, plus some grow if it will happen. And actually you can lose your money if something will go wrong. And now we have this beautiful situation when 10 years bonds, you can find it DGS10 on TradingView. Now they are 1.6, it is the same level as S&P 500, and some rich people will sell here because they already made unreal amount of money, because if you bought somewhere here you already made 50% plus. And we have some examples right here. You can see August 2015 to like February 2016. It was not really a good time for stock market because it was 338 days without growth, and it was not really good for investors. But you can see here that they just raise interest rate for 25 points. And you have to understand that it is a little bit slow machine, and I think this meme is awesome for this situation. Now they're thinking what actually they have to do, raise interest rate right now or to wait a little bit, but raise them after for higher values. Actually, they are just watching on inflation rate, and I think 2.6% and some commodities grow for 100%. So I think they will raise interest rate in 2021 because no one want hyperinflation in United States dollars. It will be not really good. Plus they are doing some other stuff. They can cut spendings, reduce debt, redistribute wealth, and print money. And maybe you already feel their stimulus checks. This is how they print money. And we have to talk about what we will expect, and I think you have to check this information, inflation rate in the United States, and if you will see something crazy like 5% plus, I think it will be a good idea to cover your positions in United States stock market, because after 5% they will start to raise interest rate, and something will happen with the market. And you can see this one, like from 2004 to, I think here, 2006. It is close to 3 years, and S&P performed only 13%. With Biden tax raise, I think if we will see a drawdown for 20% on the stock market, it will be like nothing. From the other side, if they will very slow, and actually they like to be slow in Fed because they're receiving money anyway, we can see a very beautiful move in United States stock market, but after that move we will see drawdown for 50% or maybe a little bit higher. Because it is like to control a big boat, and when you're starting to spin a wheel, you have to wait a little bit to see some moves. What do you think about this whole video? Please write down your thoughts in the comment section below. Like, subscribe, comment, and don't forget to watch for inflation rate.